Good morning, good afternoon, good night, wherever you're at. Welcome to the BitLab Academy daily live stream. My name's Kelly Kellam, and welcome to the show. We've got some great stuff to cover today, a lot of stuff going on in the markets, and we need to make sure that although we've been focused on this four-year cycle, it's played out, basically to a T every cycle in the past. We also are seeing some headwinds that we've never seen in the past. So we need to make sure, as bullish as we may be, that we do have downside targets, that we do have a strategy in place so that we can navigate this market, not have this market navigate money out of our portfolios. Because, as I wrote down in the description, markets they're not going to do what they should do or what they're supposed to do. That's a pipe dream. Now we can always use technical analysis, on-chain data analysis, fundamental analysis, whatever forms of analysis you use in your toolkit. We need to always remember that essentially the market moves money from the impatient to the patient. So that also comes with planning. You can't be patient unless you have a plan. So that's what we're going to be talking about today. So before we get this going, I do want to make sure that you subscribe to the channel. Join this community. Hit that like button. Hit the ding the bell so you get notified when we go live here. And again, if this is your first time here, my name is Kelly Kellam. Welcome to the show. That's where you can find me, right there on my Twitter and other socials. And make sure that you're following all the correct socials that you see right down here across the bottom, and you check out bitlabacademy.com. But we're going to go ahead and discuss a little bit about what's happening in the market. But before we dive into that, we got all kind of stuff. I mean, so many charts we're going to go over today. Some more macro stuff, and then towards, we're also stick around because we are going to be breaking down a lot of stuff going on within some of the key charts. I actually showed some trade setups yesterday, and you know what? Some of them would have been stopped out. Some of them still not yet would have been stopped out. But the point of making an effective trade strategy plan and to consistently be in the profit over time is to be willing to take shots, but also do it in a calculated way and making sure that when you are taking your shots, that you're protecting yourself, protecting your capital with good risk management strategies, having those stop losses in place, having your targets in place for where you would be taking profit on your entry. You don't just take a shot at the market and then take profits just willy-nilly along the way. You want to have an idea in mind, and that's those points can change along the way. But if you don't have targets in place on entry, then that means you also don't have a plan. Same thing with stop losses. If you don't know where a good effective spot to do your stop losses are when you are entering a trade, again, you don't have a plan. So planning in patience is what equals profits, and that's what we're here for on BitLab Academy daily streams. Also within the actual paid membership areas within BitLab Academy, where we break every single thing down from the most basic concepts to the most advanced trading strategies. And as I've been mentioning days and days and days here, over a month now that we've been going live, we have been working endlessly, tirelessly. I'm putting in 12 to 14 hours days, recording content, having the content edited from our editing team, getting that integrated into the brand new website that's about to be launched. So shout out to the entire BitLab Academy team and everybody over at Hit Network for working as hard as we can so we can bring all this great new content to you all. So I do want to shout out everybody. There's so many people that are showing up early here in the chat, and I do want to just say special appreciation and love to all the core members of our community. And for anybody that doesn't know, I also sort of give a little, I don't want to say incentive, but there is a bit of an incentive to come early because those that show up, early in the first, whether it's pre-stream when we have the link up or when the stream's already live in the first 5 minutes or so, I do like to invite you all that are already here. If you're here early in the chat, let me know, let our team know some of the coins you've been looking at, some of the things maybe you want charted. I try to go through some different coins throughout the show and different projects and really get a broad look at the market, not just do TA for you, but sort of walk you through different scenarios, different strategies, different tools on each stream. And different projects as well, and give you, not just telling you what the price targets could be or where an entry is. That I don't want to do that on this channel. While that will be some of the some of the takeaway that you'll be able to get from this, I really want to incentivize you to do your own research. I want to encourage you to do your own research, do your own analysis. But the point of this stream here is to sort of walk you through that so you're able to do that. It's all about bridging that gap from beginner to pro. So shout out to everybody here in chat that's early. Let me know some of the coins that you're interested in. Let me know some of the stuff that you've been wanting to see. I know ICP has been something that people keep putting in, so I'll try to make sure we hit that one today, of course. And shout out to, so many people. And I want to give a special shout out to Mr. Kevin Trout, who was actually the very first person that made the first purchase, who was the first subscriber, I should say, to the BitLab Academy trading stack when we launched it back on, I think it was November 25th. So it's special shout out to Kevin. Not only was he the first one to make that membership subscription, he also was the first one in stream today. So again, special shout out to Kevin Trout. Also want to shout out Miss Karen Swigart Harris, always in the house. Kevin Trout again, Taylor Brown, Alex Green, my main man here on the team here at BitLab, help improve a bunch of the content, build some quizzes, all the stuff that's necessary. I mean, it's a massive undertaking to completely relaunch BitLab. So anybody that's been waiting on that new content, my only thing to say is that thank you for your patience. We have, it's not just shooting something and putting up. There's editing, there's integrating the membership databases, the new webs. There's a lot going on there. So we're trying to make sure that we do it in the best possible way so that we can give you the best sort of value in the actual BitLab Academy. So also continuing on, Taylor Brown, we got who else we got in the house? Crypto JMP. So many familiar names so far. Wonderful community we're building here. Mike Volmar, or Volmar, I should say. Alexandra G, Matt C, my boy, King Peasant, Justin Eubanks, so many people in here. So again, shout out to everybody. Jackson Crawford, Crypto Chef. So we've done the shout outs. We're 6 minutes in. I'm trying to make it my mission to do the intros as quick as possible so we can actually get into the stuff you want to see. So have you let me know you're here early. You still are within that, window. This is your last chance. Let me know some of the charts you're looking at. And if I'm not able to get to them on this stream, I'll try, if we're getting several people calling out those different coins and projects, I'll definitely try to make it my mission to include those on what's going on in the show. So, again, thank you everybody for being here. If you have not yet, we've got about 116 concurrent, only 39 likes. What are you doing? The easiest way to help to see this sort of content continually be done on these types of streams that are free for you to watch. Do us a favor of hitting that like button, hitting that subscribe button, dinging that bell. It's a very easy way to support, building the crypto ecosystem and more specifically building this community here at BitLab Academy. So let's go ahead and jump in to what's going on in the markets. First things first, make sure you're following at Academy BitLab, which is a BitLab Academy page. And, not only hit that like button, hit that subscribe button, come over here to the page and retweet this, let other people know, because I'm not just spoon feeding people, I'm not giving people water. I'm trying to not only give people water, but also teach them how to get water by people sharing these tweets and letting other people know about a very, basically a free educational platform that they can come and learn about crypto, how to navigate it, the tools, tips, tricks, strategies. Go ahead and share this. It always helps. Now, I've got a lot of stuff to go through today, so I don't think I asked. Let me know. I'm not seeing any sort of error comments, so it seems like the audio, visual, everything's working out just fine. But so let's go. Let's continue on here. Now we can see this is something. I've brought this up on nearly every stream, and this is very important, and I want people to be aware of this. This is very important to understand where we're at in the market cycle. And this is, there's so many people that argue about, we're in a bull trend, and other people say, no, we're in a bear trend, and nobody identifies what time frame they're looking at, because very well, we could be in a bull trend, bear trend, bull trend across multiple different time frames. So we are trying to determine right now if we are here or somewhere here. And we have not determined that fully yet, so we have to pay attention to this. And so what I want to look at today is in the event that, and we're going to do some TA also at the end. So again, this is the last sort of chance you have right now to throw in some of those coins you want. So go ahead and type them in, put them in the comment, integrate within our community here. Participate. This is all about participation. Also, I forgot to say this. Let us know where you're tuned in from, what city or state or even country. We like to build a community and draw those connections by identifying those things. So maybe you'll connect somewhere, have some meetup groups and support systems, because this is all about building community here. So continuing on. Are we somewhere here looking for a bigger drop? Are we in the middle of this accumulation zone that we could still see a little bit of rejection, or are we here? We need to determine that. And we're going to look at some of the things that are in the market right now that suggest that that we may not be here. Maybe we need to have that further drop to the downside. So moving on here, one of the things I want to point out here is that we can see there's major headwinds for stocks in the works. Now, of course, this is a Bitcoin, crypto, altcoin focused channel. As I've mentioned before on the stream many times, we need to be aware of the grander context. Very similar to when we talk about market cycles and we're trying to identify where we're at. If we're trading this trend, say if we're trading this trend and we know we're in a downtrend, but we're looking at the 4-hour time frame and we see this market cycle, this bottom point to the upside reversal to the downside, is this full market cycle playing out on a smaller time frame right here? While at the same time, we're playing out this downtrend on the macro sense. So we need to be aware of this similarly with the context of the market of what's happening with traditional assets. So as we can see here, we have this massive uptrend. We found support. But as we can see, similarly, we have this rounding top here, meaning the momentum is coming to the upside quite ferociously. But then we're getting smaller amount of momentum to the upside, noticed by what's the difference in the high here and the high here. We have much higher high. Now we have not nearly as high of a percentage gain here, and then an even smaller percentage gain here, showing that rounding top, which eventually we have the lower high and it rolls over. Similarly, we had this bullish impulse and we're rolling over. And not only that, we can see this play out specifically on the MACD, which is something that the MACD is great at, showing us what's happening with the momentum of this asset or this asset class. And in this case, we're talking about bonds. Now, this has been pushing higher, and two-year treasury yield making new highs on a closing basis. So this is still going up. This is, creating some sort of stress on the markets. Now, if we continue on, I want you to see this. On the aggregate, yields tell the story. We're seeing another big spike today across the maturity scale. Not surprising at all from my view. If you want to know where the monetary policy is headed and what has been the narrative lately, what has been driving the markets and causing that uncertainty, that fear, that doubt, that are we bullish? Are we bearish? Well, it's this narrative, this battling the understanding of what's happening, what's going to happen with Fed interest rates, with what's going to happen with monetary policy, with what's going to happen with all of these things that are driving the question about, is it time to go risk on, or is it time to go, or is the higher paying interest in something that is safer, like 10-year treasuries or bonds, or these sorts of markets that if you see assets flowing into them, then at the same time, let's look at this. 10-year treasury yield can also impact the stock market with movements in yield creating volatility. Rising yields may signal that this is the key right here. Rising yields may signal that investors are looking for higher return investments that could also spook investors who fear that the rising rates could draw capital away from the stock market. So if there's higher yields going into these traditionally longer term plays, safer assets, that also means that there's a risk off sort of mentality right now, looking forward, because the markets look forward. They're not looking at this exact moment in time. Every day that the price movement, every day you're seeing movement in price action on traditional assets or even in Bitcoin. That is a bit of a speculative. You're seeing the dominant speculative guess as to where they think the markets are going to be in the next 1 to 3 months, 1 to 5 months, because just as we see going into the FOMC meetings, we see a lot of volatility because there's a lot of speculation about what's going to happen within the price action of markets based on what the monetary policy is. So same thing here, understanding what's happening or looking or even coming to shows like this or reading on Market Watch or CNBC or whatever news outlets you're doing, not just one, but creating your sort of thesis around what the narrative may be moving forward into the next quarter. That's what's important right now. Now, in addition to this, we can see U.S. investor sentiment is basically U.S. investor sentiment, what the percentage of the investor in the market is bullish. Right now, we're sitting at around 21%. Okay. Now, this is not very bullish. Now, there has been a bullish impulse, but what we have to battle, what we have to contend with is, are we seeing a bullish impulse, which is not the start of a bull market, and we're going to get a rejection lower, or are we seeing a bullish impulse that is trying to find its footing here? Are we testing the bears, and then are the bears testing to see when the bulls will come in? And if there's uncertainty in the market, will this roll over and continue to the downside, which is what this leg would be right here. So this is what we're trying to gauge. And when we see the traditional investor sort of sentiment, only 21% bullish, this is one of those things that adds to the pro-con column, or the bull-bear sort of narrative of the markets. And if the markets are generally bearish, not every single person in the market is bearish, but there's a dominant sort of bearishness in the market, that means that there's money on the sidelines. There's money not yet coming in because they're looking forward and seeing a potentially bearish continuation over the next 6 to 9 weeks. And so we want to pay attention to this. Now, we move on to something more traditional. We see this fear and greed index, and we can see that if you haven't used this yet, this is on the free site, lookintobitcoin.com, which also has, look at all these free charts you can have. Some of them will be a few days delayed. They won't be absolutely to the minute, but with on-chain, you don't need to the minute data. It gives you a good macro outlook, a macro perspective as to what the behavior between different addresses, different types of investors are doing, long-term holders versus short-term holders, market value versus realized value, all these different, and you can explore this. But we can see here, fear and greed index. Now, this is a sort of different look, more specifically on crypto, but we're looking at the sentiment here with this chart. When we look at the fear and greed index, we can see that when we do get into these very overheated zones, basically very fearful, this also tends to market bottoms. Now we're getting more and more fearful, bottom, more fearful, bottom on these smaller trends. Now, once we get into the actual deep red, this actually signaled the market bottom. Similarly, right here. Now, when we see where we're at right now, this doesn't mean, we had the actual darkest zone much before the actual market bottom. So this is something to note. Not every signal, not every indicator, not every chart that you're looking at to gauge whatever, to give you data for whatever parts of your analysis you're utilizing, not everything's going to be 100% hit rate. But what we can see is when most people are fearful, this does give an indication that we're likely going to see a bounce. Now, we've got back down here. This is the FTX crash right here. We never got super fearful after that, and that may be for a number of reasons, but we want to utilize the various aspects of different data sets so we can make sure that we are having an informed decision. Now, what I want to point out here is that this very well could be, you see right here where we're getting, we got dark red, we get all the way up into this sort of false rally, push down. We had a little bit of a fake out here, which this is hard to gauge because this was a global economic shutdown. And then after this sort of rally here, then we broke down and got that red. Is that something that's in the cards for crypto right now? Is that something? It very well could be. When we're looking at a lot of the metrics that we're looking at today, it seems like there's a certainty or lack of conviction from the bulls. Okay. And in addition to lack of conviction from the bulls, the longer we hover around and below this 25K level, which we've rejected from a number of times, then this is sort of increasing the narrative of uncertainty, and markets moving up does not work in tandem with uncertainty. We want to highlight when there is bullish pressure in the background, whether it be from bullish divergences, whether it's from high quantitative sort of measurable by numerical data, high fundamental adoption that is creating sort of a fundamental bullish divergence, or something that leads to, it shows that the bulls are fueling up. And right now, we're not yet quite seeing that. We're seeing actually more of a bit of a cool off, and I'm going to show you why. Now, whether we are where we're at right now looking, and I want to point this out, this is not specifically only, this is not only for something that is valid today on March 2nd, 2023. This video, this stream today is meant to also be utilized, whether it's in 6 months, 9 months, bull market top, bear market bottom. This is meant to be utilized to see the various different data points that you could pull together when you're trying to identify our market setting up to go lower. Whether you are very excited because we're pushing so higher and we're trying to see, should we be getting out? Should we be taking profits? Should we be adding to our positions? Or right here where we're having this relief rally, as it stands right now, it's still just a relief rally until we start getting we break this the high that we've had on the price action. Until we break this level here, this is still yet but a relief rally because we had a large bullish impulse, now a smaller bullish impulse. Until we're able to break this level, we have not confirmed that this is truly going to have another leg up. So we want to pay attention to all this, and we want to pay attention to these various different tools that we're going to be looking at. Now, one of the things we can look at is this, and this is looknode.com. I believe, don't quote me on this, but I know they're very affordable. I do not have a partnership with them. This is just a tool that you can utilize. I think they might have made a lot of these charts free, so definitely check them out. And you can come over here and you can look at the behavior of big money players in the space. And we know that because, again, this is one of the reasons why Bitcoin and large majority, not all, but blockchain protocols are phenomenal, because it's not like traditional assets where you have to wait quarterly for earnings reports and see what's on the balance sheets and see, waiting for people to make other companies to make declarations about what they're holding on their balance sheets. Are they holding that asset you like or not? Did they sell? So what we can see here, we can see in essentially real time as the blocks are printed, it would in Bitcoin, which would be roughly every 10 minutes, we get this data that we can see the small holders with less than 0.01 also, and you can select a variety of other sizes on that. These are the ones I've selected, but we can see right here, actually I'm going to zoom back out. What I want you to notice is right here in this zone right here, everybody is wondering, are we going to go higher? Well, look at where the large players in the space, the largest players in the space, over 10,000 Bitcoin, they started taking profit right here. Now, what do you see when we're looking at this? If you look at where my mouse is, now look at the crosshairs, the arrows, there's a line that goes up and down that projects across. Now, what does this, if you track this all the way across, what does this show? This shows this was previous all-time high. And at this point, when we got to this level, what does this mean? This means that people are starting to take profits. In large players, we could see over here, over 10,000 Bitcoin, started taking profits as soon as we got above previous all-time high. And that's just where it started. And it continued predominantly all the way through this peak here. So this entire rounding top was informed and was highlighted, and in many places, I think, let me look. If we go to look into Bitcoin, we go to look into bitcoin.com, we go to charts. Okay, look, so address balance available. So this goes all the way to plus 1,000. So we can pull this up. Similarly, look at this. Starts taking profit. Yeah, starting taking profit, basically leading into that rounding top. And so you can utilize these data points to inform what's happening. Now, if we look more locally, where we're at more locally into, March, beginning of March 2023, we see, look at this bullish divergence we're having right now. Why is this a bullish divergence? Because look, they're starting to accumulate back here, and we're still getting a little bit of a drop. And this goes a little bit sideways. We're getting a little push up. Now we're starting this accelerating, and look at where this accelerates. This is going parabolic, preceding this market drop. And this is the FTX collapse. So not everything's going to be a perfect map of this goes up, the market goes up. But what we can see is there's a little bit taken off the table right here. But in relevance to this market move up, small correction to the side, and what we're sort of waiting on here, we're seeing a little bit of uncertainty. We're seeing a little bit of a push up right here, but we're seeing a little bit of uncertainty at this level. There's a lot of if we zoom out. people started, the large wallet holders started increasing their position size, increasing how much the number of people holding 10,000 Bitcoin, or wallets, I should say, people and entities, starts increasing all the way from here. So into market weakness, there's accumulation. What is this? This is known as a DCA strategy, dollar cost averaging, because they don't need to identify the exact bottom, because Bitcoin and crypto assets, all assets in reality, can be very irrational. So they're starting their DCA all the way up here at $40,000, $42,000, and then all the way down to $17,000. There's basically, generally, we can even put this on, let's do a 30-day SMA, smooth it out, 30-day moving average. We're seeing them increase all the way into, stop moving on me. We're seeing this wallet size increase all the way into, on the 30-day moving average, into this accumulation zone. So where we're at right now, we're not seeing a lot of interest from the 10,000 plus. So now if we look at the 100 plus, we can see, we're going to zoom in a bit here. Generally, this is a little bit less clear, but we see, look at this. A lot of Bitcoin was accumulated. These are still smart traders, but they're not having as big of an impact on the market as 10,000 plus. But we can see this did strong increase in supply right here. However, this goes back to the uncertainty we're seeing today, March 2nd, 2023. And you can use this sort of data anytime. And this is how you're utilizing it. We're seeing once we get to this level, basically we're looking at this level right here, this previous high. We're seeing that the people with 100, the number of wallets holding 100 or more, sometimes my magic mouse just drives me wild, but we can see them, we can actually do this let's do it on a 14-day. We can see them taking profits into this level or reducing their supply, moving out of their positions at this level. And even more specifically, we look right at the level we're at right now, still decreasing. So there's uncertainty at this level. Now, this is what we're seeing right here. Now, let's go ahead and look at this next chart. And this is something that a lot of people fail to look at, but it's an incredible tool that you can use because it gives you a very active, very realistic look as to where people that are trading futures and options and futures, gives you an idea where they're trading. Are they trading long? Are they trading short? Now, the reason why this is important, going back to talking about what we were talking about with sentiment and with the fear and greed index, what you're seeing here is an actionable signal of people, not just what's their sentiment in the market, social media weighed against also, some order actions. On this, you're seeing actual orders being placed. There's a measurement of that because when a lot of people are going long on basically futures, perpetual futures, these sorts of things, it costs money. There's a funding rate. Every 8 hours, there's a funding rate applied. So let's say you're trading $10,000. Say you're trading $1,000 on 10x leverage, which I don't recommend, especially if you're very new to trading. If you're trading 1,000 on 10x leverage, then you're trading $10,000 worth of value of that asset, with 1,000 being collateral, and the exchange is providing you $9,000. Basically in margin. They're giving you $9,000 that you're borrowing from them, and you pay a different funding rate based on whether the majority of the market is trading long or the majority of the market is trading short. Now, the people trading long, this gets a little bit technical, but it helps you understand the dynamics of the market. The people trading long while everybody else is trading long is paying the funding rate for those that are going short. So as we're seeing right here, everybody's going long, everybody's very bullish. So which means the market's getting a little bit overheated, and then everybody that's paying shorts at these levels are having their funding rate paid by those going long, and vice versa. Once everybody goes short, as we can see here in an uptrend, once everybody flips short, this creates a springboard, if you will, for price action going back to the upside. So it's costing money to go short. There's a funding rate that's accrued by trading short because the majority is trading short when we see these to the downside. Now, what I'm actually looking for right here, and this sort of perspective, as we can see, this is all long, and then once everybody goes short, then we get a little bit of a rally to the upside. Similarly right here, everybody goes short. we get some sideways action, and then move to the upside. I'd like to see not everybody in the market going long, expecting, and we've mapped this out time and time again about what's happening with the 4-year cycle and where we should be. Well, not only you and I are aware of that, the market makers, smart money, they're aware of that too. And their job right now, their job is to take your money from you. And they do that by you getting emotional, by you not having a plan, by you not planning ahead about what the potentialities and what price action could do and how not to be shaken out of that, having good strategies in place. Because when we look at this right here, that's what this zone is. It's the bulls saying, the bears being exhausted, the bulls coming in and taking profit because they're not sure yet. You have a previous low right there or a previous high, taking profit. The bears attempt again and the bulls say no. And this is just shaking people out. And there's so much money that is lost from inexperienced traders in this zone right here and in this zone right here, the distribution top and the accumulation bottom, because everybody wants to front run this entire move. And I'm begging you, I'm imploring you, I'm encouraging you not to let yourself be victim to poor strategy. And not only poor strategy because it's ineffective, but literally a strategy that will make you poor. I want to encourage you to be patient, to map out what's happening in the charts, and to wait, especially in these zones. Wait for some confirmation of coming to the upside. You can miss a little bit of this, fine. I'd rather miss this entire move, wait for a confirmation, break above this right here. How do I know that? It's this move right here. Breaking above, which is this line right here, breaking above this line, and then getting rejected, which is exactly what we've got. Broke above, got rejected. We have tested, but we're not getting that. We're not getting that follow through, especially with all of the uncertainty in the market right now. So you want to have your effective risk management strategy in place with stop losses, with all this, waiting for the market to sort of move forward. Now we got a couple more things to look at. This is something we have to talk about today. Not only is there some uncertainty of what's going on, but everything going on with Silvergate. If you don't know what Silvergate is, this is what Silvergate is. Look at every exchange. Basically, okay, FTX, obviously, they're gone for the they're gone. Coinbase, Paxos, already also just having issues recently. Crypto.com, Gemini, Kraken, Bitstamp, Circle was USDC. This is essentially picture each one of these as being cities. Now, this is the interstate. This is a means of transportation to get people in and out of those cities, whether it be air, road, trail. This is essentially a trail. Did I say trail? I meant to say train. We are not on the Oregon Trail. This is not 1992. And I don't want any of you to catch typhoid or yellow fever. But this is essentially the Silvergate Exchange Network is essentially the on-road and off-ramp, network to get money, to provide the rails to have money go onto and off all of these basically all the major exchanges other than Binance. And I believe Binance has some exposure as well. But this has a major impact. And when we look at the market today, if we actually come over here, we'll do it on this one. We're going to do, actually, let me see, all Silvergate. Okay, we look at this. Now, look at this chart. Look at this. This is, we'll go in the daily. If you can't notice this is not where the candle is. Look at how far this candle opened down because it got downgraded. And we can see that this is this is over a 40% drop. And so there's a lot of things going on in the industry right now, not just what's happening. And look at this. I wouldn't necessarily use this indicator to trade this. You could use it for any asset, whether it be stocks or indexes, but we're seeing bearish hidden volume on the BitLab trading stack, on each one of these indicating likely downside, as well as these red zones showing trend cycle tops. And we got that breakdown and we had a 50% drop here. Now this is, this is one of those other things that's leading to a lot of uncertainty within the markets right now, because We have, lack of conviction from assets. We have bonds going higher, showing attractive sort of alternative hedge against traditional markets, which could take assets and liquidity out of traditional markets. If we're seeing liquidity also coming out of traditional assets, that also tends to lead to traditional assets. That also tends to lead to liquidity coming out of crypto. Now, when we look right here, Credit Suisse as well. Major bank, their shares hit, they're down 8%. So there's still a lot of things going on within the markets that suggest that it's not just all roses and fairy tales and sunshine and rainbows right now going to the upside. So we need to plan for that downside. We need to plan for it. Now we saw that Silvergate. Now I do want to point out with every bearish narrative, we could still look to other data points that give us a little bit of hope, but also give us some sort of understanding about what is possible. We could see on this chart and I've brought this analyst up a number of times on this channel, The Rational Root, excellent chart analyst, a lot of custom charts he's made, but he's basically got, highly undervalued, fair value, overvalued, and heavy overvalued, and all-time highs, which are the dots. Now we could see that we got right down to this undervalued sort of level. And we're kind of finding a rejection a little bit off just the undervalue level. But right now, what I'm looking for, if we're up here at the top, if we're pushing up and we're above this essential fair value area, once we get above this, when I'm looking for, especially once we get above this overvalued level, when I'm looking for all the data points that could suggest a pullback, then I'm looking for large pullbacks, much more so than we are here. I do think that we are in for likely another pullback, and I'm going to be pulling up the TA charts here in a moment to show you exactly why and how this plays out on a couple of different assets as well, different crypto assets. But I do think with the pullback here, I do think that we have exhausted a lot of the bears, a lot of the short-term holders, a lot of the people that are resistant, adverse to volatility in the markets, which are short-term holders and retail sort of people coming in. I do think there's a lot of strength that if we go lower. So we're going to see how that plays out in the charts. But before we do that, I just want to shout out again everybody that's in here at BitLab Academy. If this is your first time, last time, or only time, I want to encourage you, hit that subscribe button, join our community. We got about 50% of the people watching right now are not part of our community. We've got great data every day, not only technical analysis and what's going on, but also how to utilize this, different tools, really trying to help people understand how to navigate this market and give you a realistic view as to what's going on and useful strategies to play any move in the market. So hit that like button, hit that subscribe button, ding that bell. Shout out to everybody in chat. Thank you so much for being here. So let's go ahead and dive back into this. So now, also, if this is your first time, and I do want to shout out, make sure you come over to bitlabacademy.com. It's basically our trading, blockchain, Bitcoin, investing, on-chain data analysis, psychology of trading, trading fundamentals, full course academy there. We've been putting so much work into this. There's already, the 1.0 is already there. We have a lot of huge developments, massive updates, new website, new courses, everything coming very soon. And we are going to, once a month now, we do, everybody that enters all you have to do, there's a free newsletter you can sign up for. You get free alpha that I send out once a week, as well as being entered to win free, 1 month free access to the courses and the indicators that we utilize here that are incredible indicators. And I will be announcing the winner to this tomorrow. So definitely tune in so you could claim your prize. It's basically anybody that signs up for this newsletter gets entered to win. So now if you are interested in the indicators, when I bring them up here on the charts, make sure you come over to bitlabacademy.com/indicators. And if you're watching over at Hit Network, shout out to you all. Make sure at some point you come over, subscribe, join us at BitLab Academy, which is youtube.com/@BitLab Academy. Now, I think it's time to look at some charts. What do you guys think? You want to look at some charts? Let's go ahead and do this. So we looked at Silvergate. We're going to back out of this real quick. I want to, pull this up yet again. We need to look at things as repetitious as they get. You need to be humble. You need to be patient. And you need to be willing to do the work by looking at things that sometimes you've been looking at every day, but you got to pull them up. You got to look at the Dixie. You got to look at the NASDAQ. You got to look at the Dow Jones to give you a full picture about where risk is in the market and how we can plan for it in crypto, how we can plan for it in Bitcoin, how we can plan for it in Ethereum and Cardano and all these things. If you're part of any of these, if you're holding any of these top 10 coins, let me know what you're holding. Let me know what you're looking at. Throw it in the chat. Type it down below if you're watching this later. But when we're looking at this, we can see that the Dixie, the dollar index, is really, it had this head and shoulders, which played out to a T. This is why it's really good to understand chart patterns. We could see this. Look at this. Played out basically within a small percentage gap of where this target was on this head and shoulders. This is pushed back up, which is given bearish pressure to the markets. You know, money coming out of assets, money being held in cash. The strength of the dollar reflects negatively, typically negative correlation on the strength of investment assets. Now this is pushing up. It is getting a bit of a rejection. So all eyes for me are on what's happening with Dixie. And we're going to look at something more relevant to crypto here in a moment, but we have to keep an eye on this. NASDAQ in this falling wedge. Now, why do I have all these lines on the chart? Because I want to look at all the potential areas that the NASDAQ can have rejections. Now, if we zoom out on this, let's go to auto. I'm going to double click on the chart. If you have indicators on your chart and you're trying to just minimize them, double click on your chart. It brings them back up and down. That's how you do that. And so we see these zones, and this broke down from both these zones. We have this falling wedge right here, and this is really, really struggling to hang on. So now this is typically a bullish setup to have this falling wedge like this. So if this is able to retake this and come back in, this will speak volumes for what's happening with Bitcoin. But we've looked at enough at traditional assets. Let's get to the crypto. That's why everybody's here. If you like what you're hearing, if you like what you're seeing, if you just want to support crypto and you're bullish about it, please hit that like button. Hit that subscribe button, ding that bell, join our community. I really love to grow with the type of people we've had in our community here at BitLab so far. It's been incredible, all encouraging, all alpha, all helpful hands. That's what this is about. So now let's go ahead and look at these assets that we're looking at. Now, why am I pulling this up again? This is a USDT dominance. If you know what it is, if you know why I'm pulling it up, write in chat. Let me know. I want to make sure that you all have an idea. Why am I looking at this when I'm trying to figure out what's happening with Bitcoin? And I look at what's happening with Bitcoin as a large in part a barometer as the health of the crypto ecosystem. If Bitcoin is suffering dramatically, the far majority of other crypto at this current point in time will suffer more than Bitcoin will, because they're more volatile. They have smaller market cap, therefore they can be more susceptible to price swings. So when Bitcoin drops, 78% like it did in this last bear market trend, many altcoins fell 99%. And this is why it's good to have a balanced portfolio, because as you at the bottom of the market start allocating and DCAing into Bitcoin and Ethereum and AVAX and Avalanche and Cardano and Phantom and whatever coins you're looking at, the graph, it's good to have allocations between all these, because those altcoins will also run harder than Bitcoin will too. Not all of them. Some of them will completely fail. And this is why you want a diversified portfolio. But the reason we want to look at this is, the reason we're looking at USDT dominance is, I'm going to show you right now. Look at the correlation between Bitcoin price and USDT dominance. I know I've talked about it a lot, but I wanted to illustrate it to you. Look at this relationship. The orange is Bitcoin price. The price action we're seeing here, or the chart pattern we're seeing here, this is USDT dominance. Look at this almost mirror image inverse correlation. USDT dominance drops, Bitcoin starts to rally. Bitcoin, this basically starts pushing up right as Bitcoin is peaking. As this falls, USDT dominance rallies. Now, we did see a bit of we saw this peak here with USDT dominance. Now, as this pulled back, we're seeing this right here. So what we want to do here is we want to look at the chart formation and the patterns and what's happening with USDT dominance, in addition to Yeah, shout out to Digital Assets DGen. You are right. Oregon Trail was in the 80s. I just thinking back that far, I can't pick the specific time, all those things. But I'm one of the few people. I'll be 39 in about a week. My birthday's coming up. I'm one of the only people I know my age within about 3 years. I've had a computer in my house since the day I was born. My dad was really into computers. My first business, in fact, was in 1996. 1996, 97, I had a website design company called Professional Web Creations. I was about 12 years old at the time. So I've been in computers for a long time and technology. But as we can see here, enough about me as I digress. We could see a little bit of weakness here on what's happening with this because we've made a lower low. And if this is able to continue to the downside, this gives us ammunition. This gives us liquidity that comes back into Bitcoin. So this is what we're trying to track here. Now, we can sort of minimize this and bring up our chart patterns. Now, we can see a couple of different chart patterns. We can delete this one right here because it's not necessarily as relevant at the moment. But there's two sort of patterns, two lines I really want to pay attention to here is that we have this finding resistance right here. And this is somewhat of a bullish structure because we have formed a sort of oblong falling wedge. We can also do it, from here. It'd be more of a falling channel. But we can also do it from, I like to experiment and see where that kind of gives us something too, like that. So we're having a bullish structure for USDT, which means this is a bearish potentiality for liquidity within the Bitcoin and altcoin ecosystem. So if this were to break out, then we can do a fib here, Option F. If you're on PC, it's Alt F, and then click on the chart once. And then once you click on the chart, you just move your mouse down and then click to close the fib. We have a potentiality of pushing up here. Where we push up to, it's anybody's guess. But if this USDT were to break this level, we can even go on a smaller time frame here. If we go, okay, let's look on the smaller time frame. Looks like I need to adjust my. Okay, there we go. So if we were to break this, this is going to spell bearish pressure on the crypto markets. And this is something we need to pay attention to. So let's go ahead and look at what's going on with dominance. It's also, it's struggling, but this is performing better on Bitcoin than it is on the altcoin market. Is looking like it's not only in a bearish structure, but also it's testing this sort of lower zone right now. And so we need to pay attention to that. Now, the one thing we need to pay attention to here, in addition to all this, is this chart right here. This is a Bitcoin CME futures gap. And in order to pull this up, this is basically looking at what the professional traders, the institutional type traders that are trading on futures on the Chicago Mercantile Exchange. These tend to be more institutionally minded, tend to be pretty good traders. And the direction that's happening with the CME tends to have good indication of what's happening with the market as well. Sometimes it front runs it, sometimes it follows it. But I just want to pause for a second. I want to shout out a bunch of people that are in chat that I didn't get to shout out. Mellow Crypto, Earth Angel XRP, what's up? Liviu Capitanu, man, we got some good names in here today. Shibuda Kefa, I love the names. A Mellow Fellow, DJ Lavish, what's up? Granny's Garden, what's up? A shout out to everybody that's in here. If you haven't yet, hit that like button, hit that subscribe button, ting that bell. So we're going to do that. Yeah, so there we go. So what we want to look at with this is because this is more institutionally traded, it also trades on the CME, which trades on institutional hours, meaning the futures close on Friday and they don't open again until Sunday night because they are futures. That's why they don't open at 9:30 in the morning on Monday. They open the night before because you're kind of projecting, gives the institutional traders an opportunity to project where they think the market's going to go. And because the market closes over the weekend, we get these gaps. And this is that gap, which I keep having talked about on what's going on the charts and having that CME gap below us. Liquidity tends to move towards where CME gaps are and close them out. And we can see we have this gap, which is essentially, I can actually move this up just a little bit. This gap is essentially from, we're actually going to, it's basically this, we can do the whole wick, but I'm going to do, let's say about 19 19.8, 19.9, all the way up to 20,500. So we have this gap below us that would be excellent to be filled. It would give a lot of people an opportunity. It would give out opportunity for bulls to come in. Also give the opportunity to see what the strength of the bullish sentiment is going into the next quarter, going into the next 3 months. Because if we do pull down here and these orders get filled very rapidly, that gives us a good indication that there's strength in the market and that the market's going to, if we bounce here and continue up with momentum, I'm going very heavily in the market. But this also gives me opportunity to look at the momentum as this rolls over. So we can look at, that's not what I want to do. I can just go right here. We can look at the momentum coming down into this. And if there's bullish divergences or continuation signals that bullish divergences, which could signal a buy, or basically strength coming down, which will have a small bounce and then continue to the downside. In which case, we need to, sort of plan for that. So we can go ahead, come over to our chart. That's on the CME futures. Now we're looking specifically at the Bitcoin chart, and we want to have a good understanding. We had a test here. We did get a continuation to the upside, but it got very, very small amount of momentum. We're getting rejected here. So we want to look, are there any signals? I mean, we can see right here on the BitLab trading stack, which, basically a quick reminder for everybody, this bottom one here is a significant movement. This is the combination between a bunch of momentum indicators, stochastics, MACD, momentum, and RSI. It gives you a good indication when things are generally consensus among those. Not only overheated, but also overheated on a moving average, which is this line here is a moving average. And so once we get above that and we're seeing a majority of these momentum indicators being overheated, basically overbought, or underheated, cooled off, very underbought. That's overheated is red, underheated is blue. And we saw this signal red this entire move. So this was already signaling that this was overheated going into a level that we already knew was going to be contested. So that gave us an indication. Okay. Now we look at the relative extrema. This shows, is the move moving much too quickly? When we see these bars sticking outside of the cloud or on the opposite side, in this case, they're outside of the cloud on the same side. This means the move is moving much too fast. It needs to slow down. It needs to, the stamina in there. It needs to take a breath. It needs to, sort of get some water. It doesn't necessarily mean it needs to completely reverse, but it does suggest that move needs to cool off for sure. So then we can utilize this in conjunction with things being overheated. As we saw, stuff was overheated, and then we get the signal to the upside right here, and we also got the reversal. Now we can also look at the BitLab hidden volume, which gives us an indication, is there fuel for this move? If there's a move going to the upside, but there's bearish divergence going into it, a good example of that is right here. Move is trying to push up, but there's a bearish divergence going into this on the volume, meaning there's not volume to support price action. There's no interest really as price goes higher, and it's likely to reverse. That's what happens. We can also see right here, similarly, just bearish divergence alone on the hidden volume signaled the top of this move, because there's less volume than needed to even sustain this level. So price action breaks to the downside. That's how you can utilize these. Now, the final sort of nail in the coffin is we can turn on BitLab Market Intelligence, which utilizes EMA ribbons, as well as seeing 9 or 10, I think it might be 10 different indicators that it can read divergences on, which essentially divergences, if these flags are on top, these are bearish divergences. If these flags are on bottom, this is bullish divergences. Now, again, divergences help signal, is there fuel and agreement and momentum and the things necessary to continue price action moving up a hill? Because, as you move up a hill, it takes more work to do that, and that takes more engine power, it takes more horsepower, and you need to continue putting fuel into that to have a likelihood of that movement to continue to the upside. Now, if you get a small, as you move up here, we're seeing the momentum indicators here on the significant movement showing this is overheated. And then as we get to a level of price interest, which is, we could just zoom out. You always want to, if you're zoomed in like this, zoom out. Is there a level around that I should be looking at? Well, we see this previous high. Let's see what the momentum indicators suggest as we move into that. We see the significant movement overheating into this, and we see three different bearish divergences, meaning three different indications from three different momentum indicators, as well as money flow as well. We see money flow right here. We see these things giving confluence with each other, agreeing that this price action is going to be a struggle. Now, as we move further, we move to this next level right here. Now, this is very little momentum. Very little momentum, but we have a price action level here that this is already struggling at, and we see the relative extrema sticking out to the upside, suggesting that this small move to this upside and this previous price action suggests that this will be a likely reversal. But what we always do, if we don't have the signal we're looking for on this time frame, we're trading the 3-day, let's move down to the daily. This is how we can prepare for that crash. No matter what you're doing, look at your larger time frame, for instance, the weekly. Okay, money flow, the bearish divergence on the volume. What did I tell you? Overextended going into this move. So we're seeing leading signals as well as current signals on this level with the money flow, bearish divergence on the volume saying it doesn't agree. So then we looked at those smaller time frames. We looked at the 3-day. We saw the signal. We can come down to the daily, see the signals, what's going on here. Now on the daily, we get the very clear signal. Very clear signal. Is this going to roll over? Well, likely. We have this flash to red, meaning the momentum is overheated. We have the relative extrema sticking out of the cloud here. Why do I know that? We can double click. We see this sticking out of the cloud. And we've got some updates coming to all the indicators very soon as well. We've been working on to simplify some things, have a simple look, as well as making some things a little tuned up, which is going to be really cool. But coming into this move, we see this pivot high and then this initial pullback, push back up. We see this previous high. So coming into this high, are we wondering, are we going to continue past it or are we going to break down? Well, what we're looking for as we come into this zone that's been highly contested, we come into this zone, we're seeing 5 different bearish divergences. So I would expect some sort of pullback here in conjunction with also having the overheated momentum signals. This is aggregating a bunch of momentum signals and sort of customizing it to give you that one look at all these momentum signals. And we see on market intelligence, we have bearish RSI divergence, bearish stochastics, bearish on balance volume, bearish money flow index, bearish hidden volume. That's what this external is. And we're just struggling at this level. And then we get a pivot high. That it's a no-brainer at this level. We would be planning for smaller targets. So that now we're at the daily. Let's look more locally. This is how you methodically go from that macro, midterm, micro, which is what I was talking about, which is how all of these cycles play out. You have your macro, you're playing the downtrend, but you want to play this midterm bounce, but you want to look on your micro to figure out exactly where your trigger is to make that move. So coming back to the chart here, looking at this chart, now we can come down to the 4-hour. And we can see, was there any more clarity on what we were looking at? Let's let the charts load and we can see, there's a lot of clarity here. So it's moving this, could play the bounce, pivot high, play the bounce, pivot high. We also have a established trend line now, but where we're at right now, if we saw this, we want to know, we can delete this just so we can have a clearer look. We want to know, how do we prepare if we were trading this up move? Do we know if this is just a test, this can continue down? Well, first steps first, we can see this move to the upside right here. We see that there's basically overheated, neutral. This goes overheated, but we also have a low pivot as well as showing the relative extrema sticking out. Look at this. This was front running it right here. And then we get bullish. I love these divergences on hidden volume. If you don't see the R and the H, double click on it and select this, show hidden divergences. And you're going to want to see, when you see this bearish divergence, great signal right there, drop. We see bullish divergence, volume coming in. We see this in conjunction with the relative extrema. These pointing to the downside are an indication. It's almost like a slingshot pulling down, giving pressure, giving momentum indication, likely to the upside, coupled with then this flash, we get the flash of the bullish divergence on hidden volume. And then as this breaks up, we immediately get, again, we don't even get to this high. We immediately get 5 bearish divergences. We get, this is a histogram, MACD histogram. So basically you have a bearish MACD, we have bearish RSI, bearish stochastics, bearish momentum, bearish money flow. So nothing's agreeing with this going higher. You can see the motivation of all the market participants coming out of the market at this level. And we can see the just general candle pattern analysis. We see shooting star here and then a sort of a spinning top doji candle here, indecision, neutrality after we're having a bullish momentum suggesting likely price was going to come down. Now we come down, we test the support area, we flip this to support, but then we break down again. And so we're seeing weakness here. So that's how we want to, as bullish as we can be, we want to identify and notice when there is weakness in the market. And we're seeing things struggle to continue up. So we want to look at those downside targets. Now, again, we looked at the CME gap. We looked at the CME gap right below us at 19. We're going to go back to the daily at 19,800 area, 19,900. So if we're seeing weakness right now, sustaining at this level, we want to really identify, boom, this level right here, option J. If you want to do these horizontal rays quickly, it's option J or alt J on PC. If we lose this level at 23, basically 22,700, 22,800, then I am looking for a retest down here, very likely at, which now, because the price action has moved over here, it would have been at 21,000. But this massive sort of downtrend of resistance we see, we know is this. Let's go ahead and mute that. This massive downtrend of resistance. This is a key line for us. And so if we play this to the downside, I'm looking at targets in this region of that 20, of that, basically 19,500 to $20,000 level. And if we lose this level, then we need to look to other levels using your Fibonacci, option F. And we come up to the top and we can see, look at where this level is. This $19,900, $19,800 level is perfectly in line, the CME gap and the golden pocket from this entire move, which is a very likely retrace level on any push up or pull back level on any bounce up on a push up or a pull back on a push up. So if we pushed up here, the retrace here, very likely, very healthy, would be right here at the $19,800 level. Now, if we lose this level, then we are going to be all eyes on deck on looking at all our levels, all our momentum, what's happening. Is it a fake out? And we can address that when we get there. But as it stands right now, unless we see some strength come into the market where we're at right here on Bitcoin, it is looking like there's weakness coming into this. Now we formed a higher low and a lower high right here. So are we going to form another lower high below this and hit this zone? I'm looking at it. That's what I'm seeing. And that's how we can utilize the BitLab trading stack as well to help identify some of these things in the market. We are seeing some strength come in right now, but look at this. There's strength coming in and also in concurrence with a lot of choppiness on this. So we want to look at what's happening on these smaller time frames and see if we can find any signals. There's a lot of struggle going on. So wait for some clarity. Sometimes it pays to be patient. Sometimes it pays to wait on the sidelines and let these very choppy portions of the market sort of identify where they're at so you can identify an excellent trading strategy to dominate them. We didn't do any altcoins today because there's so much to talk about with what's going on with Bitcoin. Tomorrow we were going to focus a lot on altcoins, so get ready for that. Let me know. We're also going to announce the winner for the whoever signed up for the newsletter. So if you haven't yet, make sure you come over to bitlabacademy.com and you come over to sign up. Put in your email here. You'll still have a chance to be entered to win that free month access. And I'm going to be sending out the newsletter this weekend. We have a big meeting this evening with the BitLab staff and the team, so we can identify exactly what our rollout strategy is. And I'm going to let you all know what that's going to be in the newsletter. So with that, that's all I got for you. I hope you have a wonderful day. Hit that like button. Smash the like button, hit the subscribe button, join our community, leave your comments below. What are you doing with this market? Are you long? Are you short? Are you excited? Are you hopeful? Do you have a plan or not? Let me know. Big love to everybody. I hope you have a wonderful day. Adios. Adios, muchachos. Thank you for coming. Thank you for being here again. Adios, muchachos. Thank you for coming. We're going to do this again and again. Adios, muchachos.